This is the $1 Million Mortgage Experience Podcast. I am your host, Jon Maddux. Welcome to the show. Hello, everybody. We are here with Johnny Camarena. He is a legend from back in the day with the subprime world at Fieldstone Mortgage, now a serial entrepreneur and in the commercial world. So thanks for joining me. Please like, share, and subscribe before we get started. Here we go. All right, so Johnny, you were an executive at Fieldstone. I remember Fieldstone like it was yesterday. You guys had really cool products, subprime 80/20s, kind of like neck and neck with New Century Mortgage a lot. Tell me what it was like to be an executive at that company. You were there for what, 10-something years?
Yeah, I was probably there for about 12 years. You know, what's interesting, John, about that journey is never in my wildest dreams would I have imagined, in hindsight, that subprime lending, mortgage, securitization would have turned into what we know that it was today.
Yeah.
Right. I mean, you go back, you think about, the movie, The Big Short,
right?
And you look back at it all and you're like, my goodness, was
that's
that
nuts.
us?
Yeah. But when you're in the weeds, it wasn't like that.
No. In the culture of our company, the culture of what we were trying to do was to, provide home ownership and do it responsibly.
Right.
And, again, in hindsight, really don't understand where at the origination level, it got away from us.
Right.
Looking back at it all with, the securitizations and the derivatives and the synthetic CDOs. I mean,
right.
Even at our level where we were with Fieldstone, we had no idea that was happening.
Yeah.
But,
because it was behind the scenes, a lot of the mess that was happening was behind, because they were stacking and making bets on the bets. It was deep.
Well, and again, hindsight being 2020, you go back and you look and you see the insurance policies that were being created against default.
Right.
But, what I'll tell you is that the culture of Fieldstone Mortgage Company and the 1,800 employees that, we were working with, it was an absolutely incredible culture.
I bet, yeah.
It was an incredible culture.
It was a fun time, I remember.
It was an incredibly fun time,
yeah.
And it was a very proud time.
Yeah.
And I think where some people may shy away from that resume,
yep,
kind of in their portfolio, I never have.
No, I mean, you guys built something awesome.
We're still proud of it. I mean, I still hear from Fieldstone. Folks that I worked with just recently. Unfortunately, we had a great op soup out of Houston who passed away, and we kind of all mourned for her online. It was a really, really close knit group of individuals,
right,
and really couldn't be more proud of the time that we spent.
Yeah.
Together, it was over a decade.
Right.
So yeah, it was a great journey. I mean, I took it from a small brokerage office in Pacific Beach, and ended up meeting the CEO, the founder, Michael Sonnenfeld, and we built it into a NASDAQ IPO.
Right.
And it was a great journey, something to be very, very proud of.
That's cool, man.
Yeah.
You saw the evolution of product, right?
Yes, we did.
So when you started out early, let's say early on, like year 2, year 3.
Sure.
Maybe that was 97, right? Or no, because 10 years was
earlier.
96?
I mean, probably early 90s, right?
So were you guys? So you're subprime back then, or did it start out subprime? Like, was it lower FICO always, or did you guys kind of sort of evolve in the product to get there?
So now you're aging me, John. Now you're aging me.
Yeah, those days were a while back.
Because there were no FICO scores.
That's true. That's true.
When I got started,
and then you would get a fax from like Fair Isaac, and it was like not even a score, right?
Right. I had a pager.
Right.
I'd have to pull over on the freeway, right?
There's no TikTok.
And I had a facsimiles, right, where the paper would curl up.
Right.
And no, it was.
Did you have the car phone? Like, did you have the one that was like on the little cord in your car? Of course you did.
You're talking like those. That's rich people's problems. I didn't have a car phone. I had to pull over to a payphone. I don't even know if my children know what a payphone is today.
No, they've seen it in movies like Bill and Ted's Excellent Adventure.
Yeah, right. Yeah, no, there were no FICO scores. I mean, it was really collateral lending.
Right.
I mean,
With high rates, I imagine too, right?
Well, clearly, I mean, back then there wasn't as much, advisory roles in government rules in what we were doing. But there were clearly boundaries that you could go on. I mean, we were not hard money.
Right.
We were hard money, and that's kind of the niche that my first employer back then was a savings and loan out of Long Beach called Long Beach Bank.
Got it.
And Long Beach Bank was one of the pioneers in subprime lending, and out of Long Beach Bank morphed Long Beach Mortgage, Long Beach Century, Option One, right, and the list goes on and on and on. But it was really collateral lending, and it was really go out and as I was in the wholesale distribution, not a retail loan officer, but it was really go out and kick the dirt, right? I mean, see
meet
what
brokers and
property values were. There was really no stated income back then. I mean, it was full underwrites. All of that came much, much later with the invention of the securitization.
Do you know when that was, roughly? Like, I won't hold you to it, but I kind of remember after 9/11 things sort of heating up with product, like the expansion of product.
Yeah, well, I would say,
because that was what, 2000, 2001, I think.
Yeah, not holding me to it, but the story that I remember where there were some, entrepreneurs, some financiers on Wall Street, and Solomon Brothers, and I want to say, one of the Rainier was one of the gentlemen who kind of came up with the mortgage-backed securitization,
right?
And that's kind of really what turned the tide from a portfolio product,
right? That's because that's what it started at, right?
That's what it started as.
And then as long as if it was a portfolio, that meant keeping it on the books. So there was no real way for it to flow out, so that you really couldn't open the doors and the gates wide to get a lot of business, because these banks, they only have so much money.
That's right. That's right.
So when they did the securitization and started that created this outlet that was Wall Street, which is way bigger than a bank. So, it would be interesting to find out kind of when that started. But when do you kind of remember like stated income coming out, and do you remember like that kind of happening? I know it's been a while, and I didn't prep you for this, but
no worries. Look, I remember as a young account executive, first with the Long Beach Savings and Loans, and then we were able to rid ourselves of that federal charter. We went to become a Long Beach mortgage bank.
I remember Long Beach Mortgage,
And I remember that it was a grind.
Yeah.
I mean, we were working really, really hard for, individual deals. There were not the type of volume, right, that one might remember
in like 04 and 05. Yeah.
It just didn't exist.
Yeah, it scaled it up, and then there was a breaking point. I think it was probably when stated zero down came out, when it probably really heated up. I mean, I don't remember when that was. I think it was maybe 04, 03.
Yeah, I think that's right. I mean, again, not being an expert, right, in the securitization process, although we were at Fieldstone Mortgage involved with it. I think that's right. There was this insatiable appetite for a mortgage-backed security. I mean, the thought back then is that how can you lose? Residential mortgage values in the United States will never go down.
Right.
I think that there was this notion of the credit agencies. Grading all of these securitizations, AAA, AA.
Safe loans, yeah.
I mean, what could be safer?
But what's funny is you look back and you go, we were doing 228s with a 3-year prepay. Like, I remember, I mean, I personally maybe didn't do those, but I remember there was companies that were offering that. Like, it was like, here's a 2-year, 228, 2-year fixed, 3-year prepay. And I remember people, like brokers, could choose to throw a 3-year prepay on there, or they could be like, okay, we'll do a 2-year prepay. Some of them would get greedy and like and say, I'll do a 3-year, and they'd make an extra point SRP or whatever on that, the YSB.
And by the way, again, my understanding on Wall Street was they're paying up.
Yeah, they
for 228 with the 3-year prepay.
Right, because then they knew it would go up maybe.
Give me a 5-year prepay.
Right.
Right, and I'll pay you 103 and a half instead of 102.
Right.
So the insanity of where it went, unfortunately, created the chaos that we all know occurred back in 07 and 08.
Yeah, and you stayed on with Fieldstone till pretty much the end, right?
I did. Clearly there was a point in time when we saw not just the storm clouds, but the tsunami.
Right. Well, you remember implodometer, right? You remember that?
What that was when about implodometer?
When all these companies were bursting. Yeah.
Of course.
Were you watching that daily back in 07?
It was a tough time.
Yes,
it was a very, very tough time, and it honestly it took me a long time to be able to watch The Big Short. Yeah. I mean, I had
it's
heard,
like a horror film.
Yeah, even worse. Yeah, it really, really took me a long time. And the first time I watched it was, I had to kind of watch it, by myself in a dark room, just because, clearly, Fieldstone wasn't mentioned in the movie. But, a lot of my colleagues and, folks that I knew and that we came up through the mortgage business were, mentioned or referenced in the movie.
Yeah. Yeah.
And, it was very, very much an interesting time, but almost through till the end until, self-preservation kicked in. I had a wife at home, 3 young children, and,
right.
It was time to, go back to being, an entrepreneur and figuring out what the next steps were going to be.
Yeah. Do you think subprime will come back?
I don't think so. No,
not like it was.
No. I think it was a generational thing, a generational opportunity. I mean, we could go into all of the legislation that was created.
Right.
Not just on the origination side, but also on the servicing side, which I think even has a larger impact. On the foreclosure side, for any lender or bondholder to be able to protect their collateral.
Right.
I just don't think it's there.
Yeah.
Any longer, and I don't think it'll come back like we thought we knew it once.
Yeah, which is probably a good thing, right?
I think so. Look.
I think products are going to expand. Part of the reasons why I asked you about the product expansion, if you remember that, was because when COVID hit,
yes,
the product came back real tight first. Literally within a month, it came back looser.
Yeah.
Another month, a little looser, and I don't know if that trend is going to continue necessarily. I mean, we're still a little tighter than we were pre-COVID, but it's quickly getting back to, and I think where we were pre-COVID really wasn't that risky. I mean, their LTVs were still low. The FICOs were, average FICOs were high, and people had equity, and there was no stated income, anything like that. I mean, I think there was a company doing like 1 month bank statement program, which is a little questionable, but I just wonder now with this huge influx of cash into the market, into the system with trillions of dollars, if we're going to see an appetite like we did before. Like you probably remember, I mean, I don't know if you have any vivid memories, but like some memories of when there was some like pushes to get more volume, and because you as an executive, you were probably seeing some of that, like, okay, new product came out, right? And let's go, give it to our brokers so they can originate more deals. And then there was people competing, right? Like you and New Century and Long Beach, they were all like real big head to head trying to, First Franklin and, guys like that. And, do you remember, like, was it like that kind of where like product would expand and
for sure. Look, working alongside you, over the last 6 months and kind of, experience what your company has gone through with, your product and COVID and, where your company's niches. I just never have seen the pendulum swing, that far to where, like, for lack of a better word, radical subprime lending once was. Right. I mean, there's no,
we still have
ninja
laws.
loans.
Yeah, we have these laws.
Yeah,
like you have to prove income, and
you got it. Plus, I mean, the lenders are on the hook, right? I
Yeah.
mean, the brokers are on the hook. I mean, there's a lot more
Dodd-Frank.
accountability, right, for those of you, because I'm not in that business, but those of you who choose to, originate your own loans and take the risk of putting them on a warehouse line.
Right.
So I don't really see the pendulum having swung or will swing that far over.
Yeah.
Look, I remember as a young boy, we would leave church on a Sunday, and I'd be with my mom and dad, and we would go. This is a true story. We would go to the grocery store right after church, and we'd pick up our groceries. And I remember my dad, speaking with and talking to his banker, you know, in the grocery aisle.
Right.
Hey, Mr. Camarena, hey, Mr. Long, how you doing? And they're shaking hands. And there was a relationship there, right? I mean, the bank
from the lender to the borrower, there was the person actually was lending and keeping that loan. Yeah.
You got it, right? I mean, there's a handshake, there's an eye contact, just like you and I are having right now.
Yep.
Right? There's an understanding.
Yep.
But, when you get into trillions of dollars of securitizations, you get into FICO scores and you get into automated underwriting, and, we lost control of all of that.
Right.
Right. And so I think, the government allows us, you, me, entrepreneurs to kind of, self-regulate ourselves for a period of time. But when we lose control of that, then they come in and they legislate, and that's when Congress passes laws.
Right.
And I think those laws are in place right now for a reason.
Yeah.
And that's what's preventing the pendulum from, swinging that far over again.
Yeah.
So, post-COVID, yes, everybody took a hit, but really the integrity of the loans that you all were originating were good loans.
Yeah. Great loans.
Right? It was just a, 100-year pandemic that caused a hiccup in the marketplace.
Definitely.
Yeah.
So tell us about what you're doing now. Commercial.
Yes. So
development projects.
It's been an interesting transition. What is it? You'd probably know a little better than I. The Talking Heads song. How did I get here? Because it's been a journey. Yeah. And it's been a great journey. But after we wound down in as soft of a landing as possible with Fieldstone, a couple of partners and we kind of took a deep breath, just like I just did right then. Thinking
you
back.
Remember,
yeah. Just thinking back on it all, right? I mean, it was a long time ago, but it seems like yesterday. We decided to go in, and where is the opportunity? And I had met up with a gentleman who had kind of been one of my mentors, and he said to me, "Hey, Johnny, this feels a little bit like the RTC days, the savings and loan crisis."
Yep.
Right. And so kind of using that as a model on, hey, subprime imploded and the tsunami that came after, we set up shop as entrepreneurs, and, we set out to, look for distressed opportunities.
Foreclosures and
foreclosures, distressed notes. I mean, the tsunami came, really fast and very, very hard, unfortunately for the country, right? Unfortunately. And so we put a group together after we wound down Fieldstone, and we started picking up, first residential assets, and then commercial assets, and creating a portfolio, moving out of originating paper,
Yep.
as we did in the mortgage market, and then moving into hard assets.
Right.
And so really that's where we felt, the opportunity was, let's call it from 2008 till 2012, 13.
Yep.
It was a challenge.
I'm sure.
Right? I mean,
there was a lot of people. There was competition, I'm sure.
Competition. I mean,
was it Blackstone or something that was buying up a bunch, or BlackRock?
Blackstone, Black Rock, Purple Rock,
Yeah,
Colony. I mean, they were all.
It was like
out
a feeding
there.
frenzy. Everyone knew that.
But
yeah.
what's crazy about that time and is an effect of where we were.
Mm-hmm.
But the Dow is at, I don't know, 6,400 points.
Yeah.
Right. And there's no confidence in the market.
Right.
People had lost. There was, a transition of wealth. People had lost, trillions of dollars of wealth.
Right.
So there was we had to work really, really hard to instill confidence
Mm-hmm.
into our small little group to go out and to get investors to, invest with us.
Right. Especially
then,
after a big scare like that, you got to build trust again. Like,
and lo and behold, what happens? But Bernie Madoff,
that guy.
Yeah, that guy. But
Right.
it came at a time, and of course, Bernie is a result of the implosion, and that's what caused his Ponzi to fall apart.
Right.
But now, you have investors saying, well, who can we trust?
Yeah.
Right?
You can't trust Bernie.
You can't trust Bernie. You can't trust Johnny.
Yeah, right.
Right?
It's hard, yeah, because then people want to look twice and
it's hard.
pinch
It's
their
hard.
pennies,
And
yeah.
I'll never forget that day, right? When that
Right.
that came out, and it was like, hey, Bernie Madoff, and we got questions from investors, and you guys are not accredited investors, and we're doing different exemptions, and we're trusting you with our money, and
Right.
if we can't trust Bernie, who do we trust?
Yeah.
So it was a really interesting time as we pivoted out of the what I would call institutional money
Right.
into private money.
And that
putting
needed to
money
happen.
work.
Like that needed to happen to sort of fix the market in a way, because those houses need to be those notes, those they need to be dealt with, and the government couldn't have done it. So they needed private guys like you and Blackstone and to come in, figure out what to do with the paper, figure out what to do with the foreclosure homes.
Yeah.
Maybe fix them up, do whatever you got to do. Get renters in there. Like someone needed to do that. So you kind of actually probably helped push along the recovery.
So, look, I appreciate that. I would like to believe that, right?
Yeah.
I mean, that's what,
I mean, at the same time, winning and you found an opportunity to make money, but it also probably
for
helped.
sure,
Yeah,
for sure. And I'd like to tell my kids that, right? Which
right.
is, unknowingly,
Yeah.
I was part of the, subprime.
Right.
Origination.
Yep.
But at the same time, we went to work very hard to try and, help clean up the mess that we inadvertently had created.
Right.
To be very fair.
Yeah.
Right? To be
Right.
very fair. And I'll tell you that as we, crisscrossed the country and to understand the severity of the crisis that was out there, we worked really, really hard to, pick up foreclosures. I mean, homes were in complete distress.
Yep.
Basements filled with water, mold.
Cement in the toilets.
I mean,
Graffiti.
crazy.
Yeah.
Crazy stuff, right?
Yep.
And we didn't shy away from any of that. We went in and did our best. And yeah, it was a really interesting ride. It was way before the reality TV shows Flip a House.
Right. It wasn't sexy when you were doing it. It was real kind of underground a little bit.
No,
right?
I still think I have a lingering a fungus on my foot from one of the
I remember
pools of
flipping a house. I
water.
remember one of the guys I was flipping with. Had to go get a tetanus shot because he stepped on a rusty nail.
And I believe that. I believe that for sure.
It was
because-
it was a gnarly time. I remember like 2011, 2012, and it was yeah. Well, I mean, so now you're doing development deals. So that was that time, and then now you're looking at building projects and different areas, right? Like so now today, like what do you look for? You look for either construction, like kind of new builds and like commercial 8 units, stuff like that, right?
Yeah, I mean, just kind of talking for the last 20 minutes and kind of going through what we've gone through. I went from originating and securitizing, mortgage paper to picking up residential REO. Mm-hmm. And then, the same platforms that were selling us the residential REO started selling us commercial REO, mm-hmm. right? In the form of office buildings, retail center, light industrial.
Right.
I mean, it was a smorgasbord of assets.
I mean, it was take your pick.
Take your pick.
Yeah.
Right. It was
like
a
menu. Here you go. What do you want?
It was.
Right.
And so we chose to stay in some, certain asset classes, mm-hmm. Retail, office, light industrial. And we got really good at underwriting the assets, understanding where the value is, understanding the different markets. And then, going in more importantly and figuring out the tenant improvements that were necessary, capital expenditures, what we needed to do to backfill the vacancy. Mm-hmm. And, we did that for 6-7 years, mm-hmm. right?
Yeah.
And then lo and behold, we find ourselves now looking at dirt because the value add commercial real estates, the economy's been so good for so long.
Right.
So now we find ourselves entitling and ground up development. So, if friends of mine would look back at my career and say, hey, how did you get from subprime mortgage lending to ground up development? Mm-hmm. Well, it was the Great Recession.
Right.
That led me into ground up development because everything that occurred in between and where the opportunities were and how we had to take advantage of that opportunity. So it was a slow and a methodical process that we became confident enough working with first, general contractors with, mm-hmm. Simple paint and carpet and appliances to, hey, we probably need to hire a general contractor to, hey, this project's getting a little bigger. We should probably hire an architect.
Right.
Oh my goodness, we probably need to hire some engineers, and all of a sudden this team came together and we said to ourselves, hey, we could probably pull off a ground up development.
That's cool.
So
that's probably like
here we are
one
today.
of the coolest things to see something go from like a, idea in your mind to a picture on a board or on like a, architecture paper. Whatever you call it, plans, right?
Yeah.
to all the way to like breaking ground, and then to see it, finished like that. That's got to be a pretty cool experience.
It's again, I think we go back and you might have introduced me as a serial entrepreneur, but I always feel like I'm an entrepreneur at heart.
Yeah.
And It is cool. I mean, before I met with you today, we were with a mutual friend, right. And we were talking about, a development piece that I have going in Encinitas, California on the 101. And, how proud I must be of the fact that, we took a piece of dirt and, we built something.
Yeah, that will last for a long time. I mean,
last for a long time.
Think about it, you drive down the 101 or anywhere in the world for that matter, and you see buildings that have been up there for forever, like some for 100 years. You're like, whoever built that, is pretty stoked that like it's a legacy in a way. Like you built that project.
And by the way, the way that the architect and the engineers overdeveloped it, it'll be there forever. Which is a whole nother podcast, by the way.
Yeah.
Which is on value add engineering, but we'll talk about that later.
Steel beams and all the stuff, right?
My goodness.
So that kind of leads me to think about, right now with COVID,
yes,
there's got to be some opportunities. And I'm sure you're seeing some potential opportunities out there. What I would think would be like things like office retail, like, a lot of people are not, as you saw here, there's not a lot of people are remote.
Yeah.
So, for good reason, you want to be careful obviously with COVID, but however long that lasts, right? That's going to be, it could be another 6 months, it could be another year, but how long, to where the point is, some people realize, like I think it was Google or maybe it was one of them, Facebook, decided, we're going to be remote for the next year or 2 years. Like they're just, some office space is just never going to come back. At least I shouldn't say never, but it just might not come back for a year, 2 years, 3 years.
Yeah.
Do you see any like opportunities in office or retail?
So,
like, what are they going to do with all that extra office building
yeah,
space?
no, I understand. So, look, it's the crystal ball, right? I mean, you pull out the crystal ball, and I think you, John, and appreciate you doing this educational content and these podcasts. We all try and get as much information as possible, right? To make intelligent decisions on not just for our family and our investors, right, but for the good of the community. When I look at what's going on today, again, my personal opinion, we've always tried, my group and I, we've always tried to kind of think global,
right,
but act local.
Mm-hmm.
So much of what is going on out there is completely out of our control.
Mm-hmm.
But what I think that we do very well is that we underwrite kind of almost in a neighborhood environment, kind of, block by block. So, when I think about where are the opportunities right now, I mean, look, we had such a strong economy going into the pandemic, mm-hmm. that the pandemic, as horrible as it's been and disruptive as it's been, I think will end. I think people feel like, there's an end in sight.
Sure.
So we haven't seen, the sort of kind of tsunami opportunities that we saw back in 07 and 08.
Right.
And therefore, I mean, as you know very well, I think there was a 6 to 8 week maybe opportunity and mortgage note paper.
Stuff that couldn't sell, right? Like we had a bunch,
But not just on the residential side, but also on the commercial side. For
jumbo commercial, yeah.
Yeah, 1,000%.
But Wall Street came back full swing, wanting to buy it.
Full swing. I mean, I don't know. Where's the market today? Anybody know?
Like the Dow? Or?
Yeah, the Dow.
It's like 28.5 or something. It's crazy.
I mean, we're back.
Yeah, I mean, there's trillions more dollars in the market in the last 3 months, right? It's like
seems like it. And again, on my drive over, I heard on the radio the Feds did something today. I haven't educated myself on it, which
like low rates,
just to help stabilize rates and to according to what I heard on the radio, preserve. Use the word preserve, mm-hmm. Where interest rates currently are, right, at a low level for the foreseeable future.
Yeah, to give some stability, some confidence.
Clearly, we're in an election year.
Yep.
So we don't know where that's going to go, right. And where the current administration or a future administration, right, may go with it. Mm-hmm. But what I'll tell you is again, what we try and do is we try and underwrite, and we really, really try and understand our marketplaces where we work on a neighborhood level.
Yeah.
And it's the only way that I know kind of how to insulate ourselves from this global movement of, politics or economics. And, when you talk about specific asset classes like office, right? Mm-hmm. I mean, we've been very, very bullish on suburban office for the last probably 5 years. Mm-hmm. So suburban office got hit really, really hard, mm-hmm. as ironically people fled to the cities.
Yep.
right? I mean, cities like San Diego, Chicago, Denver just
Yeah.
exploded.
Right.
With
You saw a
population.
lot of cranes and buildings being built. Yeah.
Houston. I mean, I would go to Texas and I said the state bird was the construction crane. I mean, you know.
Yeah, I went to Nashville and it was
gonna
like,
say, you were in Nashville.
there was cranes everywhere. I was like, what is happening here?
It's like the
crazy.
state bird, right?
Yeah.
But now, lo and behold, what are we hearing? People are leaving.
Yeah, they're going back into the suburbs and stuff, you know?
So, you know, what does it all mean? I don't know.
Is it temporary? Is it, you know?
Yeah.
Like, I just think, like, I think of these office spaces and how they're ghost towns in a way. And I just wonder if we just haven't, the reality hasn't set in that, like, not a lot of these are going to be full again for a while. Like, it might be a year. It might be 2 years.
Yeah.
You know, like, with the trend of people going to work from home, you know, like, you can avoid traffic. You can avoid that cost of sitting in, you know, in your car for half an hour a day or an hour a day, however long you're commuting, and be home. And if you're able to get the same amount of work done, like, is there going to be, I do think that people miss camaraderie and collaboration,
Yes.
and they're going to be back, you know, at some point.
Yes.
I even saw an article in the Wallstreet Journal that said, you know, people are finding out that they can't get the same production and collaboration out of, you know, Zoom calls, and it's just harder to train people. It's harder to really get the most out of, you know, people if you're not working face to face. It's just the reality of it. But, you know, you just don't know. I mean, I do think there will be people back in cubicles and stuff like that, but you just wonder, like, is that going to hurt for a while, right? Is that going to be a lasting kind of trend for, you know, a year or two?
You know, look, I think that for the foreseeable future, it's going to be different.
Yeah.
And then probably for the long-term future, it'll always be different. You know, I have a very good friend of mine who's been in the insurance business for, you know, 30 years. And he's like, I'll never go back to traveling the way that I did in January of 2020.
Really?
Or in, you know, 2019.
Just won't be visiting offices. Like,
Just won't be doing it. I don't need to do it because we've figured out that we just don't need to.
yeah.
So
Until someone else does it, and then they're winning because they're face to face or something, right? Like, that could be the only way it would turn back. You know?
I suppose,
Like, so and so, like, now or MetLife's doing it. They're all boots on the ground again, and they're starting to steal accounts from you, and you're like, you got to get back out there, right? That's a way that
it's a great point.
It could happen.
It's a great point.
But if everyone sort of stays back,
Yeah.
in their houses and not traveling, then it won't.
But that's what I love about competing.
Someone's gonna go, you know what? I'm gonna get that. I'm gonna go get
because
that account.
Once I figure that out, you know,
Yeah.
we all figure it out. I'm like, I'm on a plane again.
Yep. Yeah.
You know, put me in the middle of the seat.
Yep.
I don't care.
I don't care if someone's sneezing. We all got the vaccine, or, you know, you're immune, or whatever. You know, whatever. Right.
You know, look, it's been tragic, and, you know, the loss of life clearly has been, you know, unbearable. It'll come behind us, you know. I mean, you know, the pandemic, and you know, we'll move on, and, you know, hopefully COVID-20, you know, doesn't come, you know,
21.
Yeah, too soon after 19.
Right.
You know, give us some time to, you know, digest. And yeah, there's a piece of it, I think, that'll get back to where we once were. You know, office, you know, look, I have some, you know, real estate developer buddies of mine who are, you know, trying to figure out how to take office and basically convert office into live work. Right. So the conversion would be like your office here. You know, and split it up. And,
condos,
you know,
even.
You got it.
Yeah.
You know, kind
and
of
that could help
work.
solve some of the housing issues. Like, because the supply and demand for housing is pretty whack, right? It's like, that's why the values have shot up so much, and there's multiple offers. Houses are literally staying on the market for, you know, for 5 days, and then they go pending, and, you know, or less. But I do know that condos have been less popular post-COVID because of the people realizing, I don't want to be in, you know, this 800 square foot little place, this little condo, and now I can't walk to all the amenities that I used to have, like the bars and the theater or whatever, right? Like, so you just wonder, like, I think now might be a good time to pick up a condo, like just an investment property, because it's going to turn around. The bars are going to open back up. The theaters are going to open back up at some point, and the ones that are having trouble selling the condos right now, might be you might be able to get a steal.
Look, as smart as we think we are, when we went into full lockdown in whatever, call it the end of February, March, right?
Yeah, March. Yeah.
Would any of us have predicted that the residential real estate market would be where it is today?
No.
I mean, in the middle of a 100-year pandemic.
Yeah.
I mean,
it's crazy.
Interest rates are still low. I
Very
get
low.
that,
Yeah.
right? But it's not like prices are lower than they once were.
Right.
Right. And marketing times, demand. So it's crazy, the way that we've been able to sustain ourselves. And I clearly get more of this data and information points from you than you get from me.
For Resi, yeah.
But, our project that we just finished on, in Encinitas on the 101.
Those are condos, right?
Condos.
Yeah.
Condos. And,
You pre-sell some?
We pre-sold all of them.
It's amazing.
In the middle of a pandemic.
That's incredible.
Yeah.
That's crazy.
So there's no way we would ever have predicted that.
Yeah.
I
think there's a lot of divorces that have happened.
Is that what it is?
Unfortunately. I mean, no, that's part of it, right? I mean, there's a demand for housing.
Yeah. Okay, but the divorces.
Sorry, we're laughing because I'm sure it's terrible if you're going through it, but but like that would double the need for housing. Not double, but if you had, let's say you had 20% or 10% of people that were stuck in house together, decide to call it quits, then now you need more houses, right? Or condos or apartments. And
well, we're gonna call our your next podcast will be with a divorce attorney.
Yeah, I've done one actually. I've done how to get origination referrals out of a divorce attorney because they're clearly looking for.
I used to
loans.
do that when I was in the mortgage business.
You did?
But after like 4 or 5 like 1003s and app appointments, I'm like, there's
hard.
No way.
Yeah, it's a hard job.
Not divorce. I mean, it was hard enough as it was. Yeah. But to get into the middle of that, forget it. I'm like, no more divorce attorney referrals.
Right.
No way.
So, talk up. one of the things that I've seen in California, there's a recent, I think it was SB5, maybe. I think it was the law that was passed. AB5.
AB5.
Where they're trying to get rid of the gig economy, or they're trying not get rid of it. They're trying to crack down on companies like Uber, Lyft, to make them employees. So these independent contractors or self-employed people. There's been a trend, I think, over the last 3 or 4 or 5 years of people breaking off from traditional jobs to become grocery shoppers or become TaskRabbit, people, or to get, the gig economy, right? Like there's been a ton of that. I think the trend was so big that there was like, they were worried, maybe not worried, but thinking like there's going to be a lot more self-employed people than there's ever been in our country, which I thought was a good thing, right? And that's why our niche of bank statements was a cool niche. But, with these laws, like, do you think it's going to affect the gig economy? Like, have you heard anything about that? Or?
Well, so I'm just going to kind of ask out loud, right? Where does that proposed legislation come from?
It's right? California's trying to tax everybody.
So,
right?
Okay. I mean, I believe you when you say that. So just, start there.
Right.
And,
we know we're in the hole here in California.
So, is additional taxation, really good for, the entrepreneurial spirit and, to allow people to go out and, to do what's necessary, right. To, earn for their family. I don't know. I don't think so.
No.
But, I don't know.
Yeah.
Maybe a little bit above my pay grade, to understand where that line intersects, right?
Right.
Between, 1099, self-employed, entrepreneur, and, taxation as a W-2 employee, and, where is the benefit to society, I suppose.
Yeah.
Right. I mean, that's what happens in Sacramento.
Yeah, right. That's why they get paid all that money, all that tax money from us.
But it doesn't feel right.
Mm-mm.
It doesn't feel right. I mean, I think that, all of us appreciate, respect, Uber, Lyft.
Have you used an Uber
Ubers.
since the pandemic?
Can I say yes?
Yeah.
With the mask on?
Right, right.
I think I had a shield.
I wonder how many, I'd love to see the data on, like, if the Uber drivers have, how that's, like, what the trend is there. Like, if it's harder to get an Uber right now, or if there's just less.
Well, I had just between you and me, or nobody else is listening to this, right?
Right.
We had a little dinner party at my house on Saturday, and I had a
Very small.
just small,
yeah.
just two couples, and they took an Uber from my house in Encinitas to Carlsbad, and it was like $114.
Oh, jeez. Wow.
Yeah. So I think they're out there.
But there's less, so they can charge more, right?
Hey, supply and demand.
Right.
Supply
Have you
and
noticed
demand.
other?
And they, by the way, they paid.
Yeah.
Right. And can you imagine? I mean, the Uber driver, made a good buck off of that.
Right.
But had it not been for, the judge intervening on, 2 or 3 days before,
there might not have been an Uber driver.
they would have been probably, camping out in my backyard. I don't know.
You're walking,
Something.
riding the bike like I did. So commercial loans.
Yeah.
Have you gotten any commercial loans recently? Like in
So
the last
yeah,
couple months?
we're in the middle of that. I'll tell you, when we were looking at our crystal ball, my partners and I, we were a little nervous about the commercial debt market.
Yeah.
I think the best way to describe it is I felt like it was easier to pick up, I'll make the number up, right, $5-7 million commercial loan than it was a $1.2 million residential refinance.
For sure.
Even at a 55-60% LTV.
Yep.
Right. I mean, it just really, really felt like that market had. I don't want to say it had gone to where, subprime was back in, 04, 05. But there are some, conferences that I will attend, and there was this, explosion in the debt fund market, where a lot of commercial debt funds had popped up. And, they were really filling the spectrum from A to Z on, a smorgasbord of loans that you could get. Commercial lending typically would go to, community or regional banks,
Right.
or then, on the larger level, you would go to life companies or maybe the CMBS market. But all of a sudden, as entrepreneurs and financiers do, they filled this niche. I think that's gone.
Yeah.
For right now because of COVID. I think it's back to relationship lending. I think it's back to
Banks
big boy full endorsement on the loans, the commercial loans that you're doing. There are different levels of personal guarantees that you can agree to in the commercial mortgage market. And, we're seeing more of that fall back to, hey, I want full personal financial statements and, where are your kids' 529s and,
Everything, yeah.
Everything, right?
Before it was much easier, right?
It was much easier. Yeah, it was much, much easier. And so...
has there been anybody popping back up, like recovering, like kind of like with us?
No, not yet.
Yeah.
Not yet. Now, to be fair, my firm, we're going out right now on a construction takeout loan, and we're going out on 2 construction development loans.
Right.
So, if I'm lucky enough to be invited back, I'll give you an update on that, a few months from now. But our understanding is, and, working with our capital partners, that, it's really tightened up.
Yeah.
And, the world is still waiting to see, what happens with the end of the pandemic.
Right.
And then, of course, we're in an election year.
Yeah. What happens with the election?
Yeah. So, what happens? What happens with the election?
Yeah,
and
it's
again,
true.
whether you're, a Trumpster or you're, supporting Biden, doesn't matter. There's still going to be, repercussions and, a different governing style.
Right.
I'm
sure
forward.
There's different regulations and loosening or tightening.
So yeah, the markets are waiting to see, and so that debt fund market, and just think of it, John, in the same terms that we thought of the private label mortgage securitization market, right? We don't have that now, right?
Right.
You've got Fannie, Freddie, and Ginnie Mae, FHA, VA, and then you've got your niche and your marketplace, but it's smaller,
right?
There isn't a large multi-trillion-dollar securitization. Same thing has happened, my understanding, post-COVID with the commercial market.
Right, it's gone back to Fannie and the local banks.
Local banks, it's become much, much more traditional. So, the liquidity's out there. You just got to work a lot harder. You got to put a solid resume together.
Yep.
You have to really, really have all your ducks in a row. They're not, handing out money.
Totally. So we like to talk about like how to get deals. I know you're a somewhat of not a deal junkie, but you're a deal guy, and you probably find deals, right? You get deals referred to you.
Love deals,
right? So where does maybe a mortgage broker? What would be some advice to like how they could find deal, like get like referrals and stuff like that?
Residential mortgage broker,
where do you we talked about like a divorce attorney or like a. We always say that the real estate agents are always a good source, but where would you, if you were to start and be a mortgage broker today, who would you go after to get besides the real estate agents? And
so, it's funny, right? You're kind of, taking me back, but, so when I was, first got into, residential subprime mortgage lending, I was on the retail side. Mm-hmm. And I kind of figured out back then that, FICO scores played a big role in, how
credit decisions.
Yeah. So we went out and we, created lists, right, of subprime FICO scores.
Yeah.
I don't know if that exists today, but that eventually led me into, I'm still a big proponent of, getting out. It's a little harder now, but it'll come back. Shaking hands, meeting people.
Yep.
To me, there's just nothing better than, what you and I have done for the last 40 minutes, right? Look each other in the eyes.
Right.
We're developing a relationship, a trust in one another. Look, I still think that, trusted advisors are a great place to go for leads.
Yep.
Accountants, financial planners, lawyers, to a certain extent. I never really got into the realtor grind.
It's like the low hanging fruit, and it's competition and.
Picking up referrals from realtors.
Right. Because everyone goes after them. Like every loan officer is going to.
Yeah.
That's their go-to, right?
Sure.
Like they're going to have their 3 or 4 real estate agents that they're bag deals from.
Yeah. I just feel like, you really have to, pick up a niche, identify a niche for yourself.
Yeah.
And, become an expert.
That's smart.
In that niche. Yeah. Right. Whatever it is, just find that one avenue and just be really, really, really good at it.
Yeah, know your stuff, know your shit.
And it might be referral sources from accountants.
Yeah.
And you
relocation people or something.
Relocation companies are great, and you may just dive into it and really understand, how to speak to and what accountants are looking for and, what their clients are looking for. By the way, I love doing business with accountants.
Yeah.
I think they are more of a trusted advisor than lawyers are. I think they're a lot easier to work with than lawyers are.
Yep.
And I think the referrals that you get from them typically don't have the chaos,
Right.
for lack of a better word.
Yeah. Because they
around them.
understand their financials so well that it's like, this guy would fit with your product. If you educate, I think I've done it once where I educated an accountant about what we did, and he was like, "Really?
Yeah.
You guys you don't even look at the tax returns?" I was like, "No, we'll either look at their asset statement and do it assets only, or we'll do we'll look at their bank statement cash flow." And they're like, "Whoa!" Like I have a lot of well-to-do clients that write off so much on their tax returns, and they can't even qualify for a mortgage. So, like to me, yeah, I think that's a huge source to go after.
Look, I think, for me, nothing comes easy.
Right.
Right. And, for all of us out there, and, if as I mentor, my children, and, I try and mentor, their friends, and they're, 15, 16, 19, 20 now. I think the biggest key to success is stick-to-itness.
Yeah.
You got to stick to it.
Right.
And so whatever it is that you choose, whether, you're going to focus your referral sources on financial planners or whatever it is, make a plan and stick to it. It does not come easy.
Yep.
My
That's
dad
good
told
advice.
me when I graduated from college, he's like, "Hey, look, I'm a pretty crafty guy, right? And if there were shortcuts in life, I love you as my son, I would teach them to you, right?
Right.
But there are no shortcuts in life.
There's no elevator to success.
Just get
right?
to
Yeah.
work,
You gotta
right? And I
use the
think
stairs.
that would be really, part of the advice, and that, that surrounds referral sources.
Right.
Make a plan and stick to it.
Right.
know,
And people like to do business with people they like. So if you make friends with, with someone who's a potential source that then, not just fake friendship, but like, there's certain things you will have in common, and, just being a kind person, and right. Like
I do. I
Yeah.
mean, I do. I got a great, just unbelievable margin profit deal in Colorado right now that I'm underwriting. And I may toss it to the curb because I don't know that I want to work with the seller.
Right. There can be some people you don't want to work with.
Life's too short.
Right.
Life's too short. So yeah, there has to be that connection. There has to be that stick-to-itness. And I think that, again, that folds back to the referral sources.
That's good. All right. So wrapping it up, Johnny, great information. But the last thing I typically ask my guests is, we all, to succeed, have had to have some failures, right? And some stand out that, maybe they're embarrassing. Some are, like, wow, that really taught me something, And so I just wanted to ask you what your favorite failure was.
Favorite failure. Wow. Again, I think we talked about it a little bit, in the beginning of the conversation, which is, kind of unknowingly, the subprime market. And I mean, when you look back at it and, you think about the implications, right? That the subprime market had on the economy, and, was a big disappointment, for me.
Yeah.
And again, I mean, I think I had mentioned that's why, took me a while to be able to watch The Big Short,
Yeah,
but
it was close to home.
Yeah, and it wasn't like a failure, right? In the sense of like, wow,
like your fault, you just did something,
really
they
screwed
screwed up, yeah.
But the failure, kind of as an industry,
that you're
to
caught up in,
self-police and do the right thing, and it wasn't just the originators.
Yeah.
Right, but it was the rating agencies, it was the insurance
the appetite,
companies,
the government, all of it, yeah,
everything. Right. I mean, so looking back at my entrepreneurial career, which I'm very proud of.
Yep.
Continue to be proud of. Continue to work at.
Yep.
I think that that was a tough period, and
but you learned some stuff.
Learned a ton. I mean, I'll tell you, I learned more in the year and a half, taking that company apart and, disassembling it, I suppose.
Right.
Than I did in the 12 years it took me to build it up.
Cool. So, thanks for sharing, man. Thanks for coming.
Thank you for the invitation, Nate. Thanks, man.
Yeah.
For the work behind the scenes.
And please like, share, and subscribe. Comment below if you have any questions. And also let us know who you'd like to have on the next podcast or on future podcasts. We love being here for you guys, and we'll continue to try to add value. But we can't do it without, subscribers and sharing. So do us a favor and share it. And check Johnny out on LinkedIn or, wherever you can find him. Maybe ping him a question if you have one.
Papagayo down on the 101 or LinkedIn. Yeah, sure.
Yeah. All right. See you guys on the next podcast. Thank you for listening to our podcast. If you guys are looking for more content like this, we have a FundLoans YouTube channel where we give away more tips, secrets, and origination ideas. You can also email us at info@fundloans.com. And if you've made it this far, I think it's safe to say you like our content. So please subscribe, share, and send us your scenarios. Let's fund loans together.